And we're back with another weekly market breakdown. You know that video where we take a look at the market from both a technical and a fundamental perspective. And just to keep in mind, guys, this should not be considered financial advice. If you are looking for financial advice, I do suggest that you hire a financial advisor so that if anything goes wrong, you've got somebody to blame, right? This is all for educational purposes. Then don't forget, if you are looking for a reliable and affordable prop firm, you can check out Equity Edge and you can get 35% off your first purchase just by using the pin link in the comment section below to grab your account with Equity Edge. That provides different types of accounts that you can choose to better suit your needs. Now let's go over. I'm going to share my screen with you guys so that you can see exactly what it is that I'm looking at. This I'm going to remove. I'll be making a video on that particular later today. So looking at some news events that took place this week, right? So not this week, last week, we had firstly we had some what was the week? No, this is for this is for this week, right? This is this week's news. We're supposed to go back. Okay, we had the NFP, or are we that far out, guys? The 13th of October. 13th of October we had was this week over here. So this was last week's news, right? Where the prelim consumer sentiment. It's weird though, because I thought the NFP was last week, which is confusing. It's kind of confusing me. But in any case, this week we've got some PPI. We've got Jerome Powell coming through to have a few words with the people. We got some core retail sales month over month. We've got some PPI. We got some more retail sales coming through. Those are core, and then we've got some unemployment claims coming through as well. But today, I believe, is a bank holiday for the US. If we just add some of these things over here, I do speak under correction. It doesn't seem like it. I thought it was. Well, today is the 13th. Not much happening today in the US, but let's move over. For this week, I purely want to focus on the price action in the market, right? Because the price action is very interesting. So guys, it's very easy to see. Firstly, we had the market opened here with a gap. Now most of you would know that the market will also always need to come back to fill in the gap, but this would be a dream come true if we anticipated the market to drop that low, right? Now the first thing we can see is that the market clearly break above this very important structure over here that acted as resistance, and the market broke above that resistance. All of this resistance is now support, so we do expect a pullback. Now the market also printed this clear impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking the Fibonacci from the low to the high of this impulse. Now, the best way to see which level the market's going to pull back to is to see which level lines up perfectly with structure. And in this case, we have the 61.8 Fibonacci lining up perfectly with that previous level of resistance that is now acting as a level of support. Now, this week, I do expect the market to pull back slightly after this massive bull run that we've had in the market. So in the short term, I'm probably expecting the sellers to come in, some profit taking from big institutions. And then from here, we can always anticipate the next move in the market. Here on GU, what we have over here is a very, 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 very interesting price action, right? So we had that move to the downside. Now, the market obviously broke a structure here, it broke structure here. This was support, and this was support as well. Now we're going to talk about the recent price action that we have, right? So the market broke below support. After support gets broken, you guys know it becomes resistance. Now the market had printed what's known as an M formation. Now an M formation is considered a bearish pattern from a technical perspective. Market printed a clear impulse. After an impulse, you expect a correction, and the best way to measure that correction once again is you take the Fibonacci from the high to the low, and you can see we do have a 61.8 Fibonacci level that's lining up perfectly with the structure that we have over here in the market. In this case, I would probably expect the market to correct itself slightly deeper, maybe to the neckline of the M formation, but that would be wishful thinking for us to see. So guys, also very important to keep in mind that we are trading in bullish price action, because the market broke below, the market created support, broke below support, broke above resistance. We had a clear daily close there, came back for the retest, and we can definitely expect that move to the upside. The same will apply for Euro USD. Euro USD, I would expect to pull back to this level. I would assume that is a 61.8 Fibonacci. Yep, another 61.8 pullback in the market there as well. This probably expect that move up there. Next up here, we've got the Nasdaq 100. Now you could probably see it already. The market had a massive dump here, right? Like a massive dump. So you can see the market is in the process of correcting itself, and we are trading above structure over here. It's very important to be very mindful of this market, right? Very important, because the market created resistance, support, and all of that supports now resistance. Now, I've said it before and I'll say it again. I do not trade indices, maybe here and there. Indices I don't trade, and precious metals also, because they are a little bit too expensive. But if there's an opportunity, I would probably look for one, right? Now, this correction is expected on the Nasdaq. The only difference is we don't know if the structure is going to hold. So for as long as we are trading below the structure, I do expect a slight correction, right? The same thing here with the Dow Jones. Now, the Dow Jones went from there till there. I don't know what Trump is cooking over there. Now, with the Dow Jones, I would be very careful, because we are currently testing structure, right? This massive impulse needs to be corrected. If you take the Fibonacci there, from the high all the way to that low there, we do have this 78.6 Fibonacci level that is lining up here, right? That's lining up there. Now, it would be wishful thinking for me to expect this market to continue higher. Now, I do potentially see a drop in the Dow Jones back to this level. Alternatively, if we do get a daily close above this level, then we can definitely start looking for any longing opportunities. But for now, would probably be looking to sort this market, because we are trading below the structure, as you can see over there. And then next up, we've got gold. Gold again, as usual. Okay, so as you can see here with gold is continuing this bullish move to the upside. And and as long as we're trading in these areas above the structure, we can definitely expect gold to continue higher. What I would like to see over here is, we can see gold is now at this previous structure. What I would like to see is a daily close. If we do close below this level here, then we could potentially see a market move down. If we do close above that structure, then you know what's gonna happen, right? Then gold's just gonna continue higher. Unfortunately, you know what, we need to see something big before this market actually starts to U-turn. Guys, that is it from my side. Let me know your thoughts in the comment section below. And as always, thank you for your time. Cheers for the ears.